the circuit breakers for gold and silver were changed in January 1st, 2015. Gold can now move $400 high or low in a day before the system shuts off. Silver can move 12. So you're going to start to see these massive swings. And now some of it is piling on in short positions to cap the rise. But it's only going to get more violent from here.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we are now into another week of trading in the gold and silver markets, as well as the other markets, although we'll be focused on gold and silver today as we continue to see some rather significant large moves, especially on the gold side, where recording as of 3 p.m. on Monday, we've seen quite a swing today. Gold futures down to 32.78 after opening at 33.36 and then swinging back up, almost $85 higher. So fortunately to join me here is Mark Gonzalez of First National Bullion, who has been following the gold and silver saga for a long time. When we back in the days when gold was hitting $600 or $700 and that was considered a lot. Now it's $600 or $700 in a quarter. So, Mark, it's nice to have you on in here today, especially at a time when I think people are, I don't want to say like confused in a negative way, like it's their fault, but I mean, you don't know what the rules or policies are going to be the next day. So, I guess obviously you get some big swings like that. But first of all, welcome on in. How are you?
I'm good, Chris. Thanks for having me on. I appreciate it. How you doing today?
Well, I'm good. It's fascinating to sit here and watch this. I think it was last week where the gold price was up $50 after it'd been up or down $100 the couple of days before, and I'm wondering if that's become the new normal. But Mark, I'd love to hear any thoughts you have in particular about either. I mean, you can decide how far back you want to go. I mean, obviously, it's been an active year since Trump came in the gold market. I mean, here we are back there we are back in November, down below 3,000. I mean, that's quite a move there. Obviously, this all began really in February of 2024, but thoughts on what we're seeing and why we're seeing it now?
Well, we're seeing it now just simply because the dollar dominance and need for dollar is dwindling at probably the fastest pace that I've ever seen. And I've been saying this for a while. I mean, I even said this when you and I met. I don't remember when. I think it was 2015 or 2016, that you're going to see some violent swings. And that is the groundwork for that was given when the circuit breakers for gold and silver were changed in January 1st, 2015. Gold can now move $400 high or low in a day before the system shuts off. Silver can move 12. So you're going to start to see these massive swings. And now some of it is piling on in short positions to cap the rise. But it's only going to get more violent from here because you're going to see higher highs and higher lows. And as this market gets brought down, as you know, with uncovered shorts to cap a price, at the lower end, they're reversed and then they go into the physical metal and cover. And one of the reasons for that I see is that Basel III, and a lot of your listeners, I'm sure, know this, but Basel III made gold, but only the actual physical holding of gold money again on a balance sheet, tier one asset next to Treasury. That went into full effect in January 1st, 2020. So a lot of these hedge funds, a lot of these banks worldwide that have been kind of capping a price, they're getting on the right side of the trade. And when they're out of harm's way, they're going to let this thing rise. But the biggest reason that we're doing this is the dollar is going to reprice into the digital currency. And when you go from one structure to the next of accounting, think of the dollar as an accounting measure, right? That's all it is. It's an accounting measure or a price point of actual money, of gold and silver. And when that price point throughout history becomes extinguished and is no longer valid or has any utility, you see a market reset. And that creates volatility. But eventually you're going to see this price absolutely take off as we get closer to this reset. And that's really what the telltale signs are telling us. And we can go deeper into that, as many questions as you want to ask. There's evidence of it. If you look at the market collapse of just the manufacturing today coming out of Texas. I mean, it looks horrible. You haven't seen a decline this steep and this sharp since 2020, and this is all due to tariffs to collapse the market. Everybody wants the Fed to lower interest rates, and they will, and that's by design, right? They're gonna
It does seem we're going to get there one way or another sooner than.
Yeah, well, you got to get there with the most pain. If you remember Powell saying years back, what was this, about 2019 or 2020 rather, I think, that there's going to be a lot of pain when you're looking at raising interest rates. Well, you raise the bond market rate, you're gonna crush the value of the bond. You lower the bond market rate or the cost of cash, you win. So what better way to do that to generate a significant market decline, and then what little goods and services that are available due to manufacturing and tariffs drop the interest rate, get rich on the yield, right? And then collapse the market, and then all the assets due to the fall becomes the bank. It's wash, rinse, repeat. But except for this wash, rinse, repeat of expansion of money or cash becoming less expensive or easier to obtain, to tightening the cash market, this time we're going to go into a reprice into digital currency. And that's what scares the hell out of me. And people need to be very, very cautious of that. As we near that, they need to be stockholding precious metals, because there's a guy named Augustine Carstens that's the head of the Bank for International Settlements. I'm sure a lot of your listeners know this, and he started talking very adamantly about the digital CBDC coming into play by the year 2025. Now, he also said all cash removed. I don't think we're going to get all cash removed, but the telltale signs are there. The ECB, as of about a month and a half ago, if my timing's accurate, they stated that their CBDC is going to be full effect in October. They also committed $1.3 billion to their digital ID program. And now you have in the US, you have this legislation of stablecoins. So call it whatever you want. It's a digital framework with a digital ID to eventually be able to control and monitor everything that you do. So you better have some metal going into that, so you at least have a potential sidestep and wealth preservation, because this market collapse that I've been talking about for a long time is going to be the biggest margin event the world has ever seen, because that does the heavy lifting on a bankruptcy. And that's essentially what we're doing. We're moving to the bankruptcy of the US currency market, so the central bank digital market can come buy it out on the cheap. If that makes sense, hopefully to you and your listeners.
Yeah, well, I know a lot of people have certainly been concerned about that. Feels like we've heard less. I don't know, maybe Augustus Carstens is out talking every day, and I just don't see it. I've wondered if perhaps we're a little bit a ways from that, or if that's still the plan. I know Klaus stepped down last week, which I'm sure everyone is quite saddened about. Although,
yeah.
To something else you said there, I've been seeing some alarming warnings in terms of the impact that the tariffs have had on the supply chains, particularly in the US, which, again, I don't know exactly how it's going to end up, but certainly my alarm is raised. And I guess there's parts of what I'm reading and continue to read in different places that remind me perhaps of the potential of something similar to that magnitude of event in 2020 here. From Ryan Peterson, in the 3 weeks since the tariffs took effect, ocean container bookings from China to US are down 60% industry-wide. I hear other analysts talk about increasing chances of empty shelves in July. I hope that is not the case, although, like you pointed out, with the policies that are in there right now, it is worth keeping an eye on, certainly.
Yeah. Well, keep in mind that the destruction of the dollar is a planned event that goes back well as old as time. I mean, anybody that's in the financial industry knows the history, or should know the history of monetary systems. No reserve status lasts forever, and gold and silver always get revalued at a higher price because it's the only tangible money that can offset or recharge the balance sheet. So there's math really to where gold and silver are going to go, but this is a design that's been in play dramatically ever since the SDR was created in the late 60s to absorb the default coming off the U.S. second bankruptcy in 71. Gold and silver then organically rose to cover a certain percentage, 40% is the magical number of the debt base or balance sheet. And then they smashed the hell out of it and blamed a couple guys named the Hunt brothers from doing nothing but was completely legal action. All the Trump tariffs are is just another nail in the coffin because this system's a top down. It goes back all the way to the SDR and the increased expansion of the dollar to squeeze as much juice from the stone. And now we're here on that final reset. All the Trump tariffs did is get everybody excited, yo, America first. But what people need to understand is that when you're a dominant currency, you have a dominant exchange rate, obviously. I mean, I'm in San Diego now because I had to come down for some meetings and to take care of some business. I'm going to fly back to Mexico as soon as possible. I live in Puerto Vallarta now, as you know. There's an exchange rate going to Mexico and every other country. So any country that has a dominant currency is exporting this inflation. And that's great because for that country, because then everybody else is absorbing the inflation while we sit back on everything that's manufactured everywhere else in China. And people talk about these tariffs with China. We need them more than they need us. Let's be honest. But eventually, the dominant currency just simply cannot maintain itself. So what happens to these other countries, such as currency defaults and revaluation, then eventually comes to us. And this is that inflationary moment. Is it going to be hyperinflation? Is it going to be some sort of stagflation? It could be both. We're going to find out how it plays out. But when you collapse a market due to tariffs intentionally as the top-down final structure, you're going to destroy a lot of wealth, especially when you have leverage in the marketplace up to 99 times in some markets, most markets actually. To put that in perspective of your listeners, the leverage just in 2008 with the mortgage bond debacle, that was only 25x, and you saw the destruction that did. So not only is this leverage event going to happen, the greatest margin call, and I've been saying it for a while, but when you go from one structure to the next and you're going to rewrite the script or the accounting of what you consider money versus the actual money itself, on its face, or surface, it's essentially a good old bankruptcy. You know, this whole action that you see with Doge and the talk of auditing the reserves, it is my personal believing, and I don't think I'll be proven wrong on this. I really don't. I just may be early in talking about it. This is to get a complete accounting. It's not necessarily to go after excess spending, right? I mean, everybody in government's been involved in this. Everybody says, oh, we're going to do something about excess spending. We're going to rein it in. We're going to get rid of the bad guys. Does it ever really happen? No, it doesn't. So it's just they're telling you one thing and doing another. So when you go through a bankruptcy the size of the U.S. dollar default in scope, you need a complete accounting, right? So it's all coming together, in my opinion.
Well, at least theoretically, as we know from the Pentagon, I guess you don't need to, but theoretically should, you would think.
You don't need to, but I don't think it's necessarily for us, and I don't think we'll get the complete accounting, but they sure as hell will. So it's all by design. I don't think any of this was not intended. We're just at that final stage of collapse and revalue. How long does it take for it to happen? I don't know. But you have again, the ECB saying digital systems in play fully by October. Does that mean they remove cash? Probably not. You have the framework for the stablecoin in the US. Does that mean they remove cash? No, it's probably going to be an at-will or option basis initially until some sort of event, and then the script gets flipped. And meanwhile, to have a good old-fashioned market crash to do some of the heavy lifting and discharge leverage is there. And you can see the warning signs. You can see it on manufacturing due to tariffs. And as far as the bear shelves, yeah, that could happen. This could be so worse than what we saw in 2020 as far as just getting toilet paper. This could bring to a catastrophic halt almost everything if it's allowed to continue, and I think it will. Then how do you juice it? You lower rates, right?
Well,
those who hold treasuries, yeah, and then those who hold treasuries get a big windfall. And who holds the treasuries? The central banks, the banks themselves, and the hedge funds. And who writes the loans for the items that are going to be defaulted on? Right? The banks and the hedge funds. So it's a win-win for them, and it's a piss poor design for everybody involved in the system, including your listers. So gold again is the tried and true money against the accounting measure, and I think everybody should be picking that stuff up.
Yeah, well, obviously we've seen some of that priced in already, and I think as you mentioned, to the degree that at the end of the day, if the safe haven asset in the treasury is becoming more and more problematic, then certainly for the people who want to get their money out before you do have some sort of restructure, I think we'll continue to see that. Although, Mark, I did want to ask you about, obviously you're involved on the retail level. I saw someone sent me a link to a YouTube short today where there was a fella took his camera in and interviewed a bullion dealer. He said that with the price elevated, they're seeing gold on a retail level, sellers 6 to 1 relative to buyers. And I was thinking if people on the retail level purchase gold and you have the price over 3,300, I could see that taking place, but I would love to know what you're seeing on both the gold and silver side in the US retail level.
Yeah. Okay. So even at this higher price, I mean, obviously, a higher price is going to bring out liquidations, right? Especially considering that gold on its surface is apparent as not the best volatile market to be in if you're trying to generate wealth. What it is it's actual money. It's wealth preservation. It's not an investment. It's not a hedge. It's money. But I personally, with the clients that I work with, I'm busier than I have been. I know the stores are busier than they have been. The foot traffic is just immense. And I actually called them today in preparation because I knew I wanted to talk to you about this. And thanks for asking. There are, first of all, First National Bullion, we have 5 stores in 2 states. So there's a really good physical presence of what that traffic looks like. Busier than ever, more buyers than sellers, believe it or not. So we're not seeing that extraction. Now, the initial run, going up to 3,000, a little bit above, but I think the fact of the volatility of $80, $100 swings in a day, it's really got people to get back in. So I caution against the selling. And I did a piece on this about a year ago at an event in Georgia, comparing the U.S. gold market and the U.S. fiscal position against that of Venezuela back in 2017, because in Venezuela, when gold rallied in 2017 against the Bolivar from about 11,000 to I think it was about 17,000, everybody was hot to trot to sell, and those that didn't buy thought, okay, well, it's too high. I'm not going to get involved. And then you flash forward just about another 7 months, and gold went to over 2 million in the Bolivar. Now, we're talking about the Bolivar here, but still, currencies die in the same fashion. So you can really see those telltale signs. Items that we're having a hard time keeping in stock, and I know this personally because I deal with a lot of fractional gold and silver, where the price of gold and silver is going to go mathematically to cure the default and absorb the bankruptcy. It has to rise to cover 40% of the gold or the U.S. obligations. That's M2, that's Treasury debt, that's unfunded liabilities. It also includes M3, but we don't have M3 being reported. So God only knows. And that number is pretty significant. So even 1 ounce of gold is maybe going to be too much of a chunk when it comes time to unwind that for either purpose of usability against.
Our gold will be too expensive to sell.
No, it's not going to be too expensive to sell. It's just,
Nice thing to think about, though.
Yeah, it's not too expensive to sell. It's
Daydream
just
about that
what are
one.
you selling for? So let's say we can talk a little bit more about where I think the gold price is going to go. I don't want to shock anybody, but again, there's math to it. Maybe we do another video just on that. But let's say, for an example, gold goes to 50 grand, and that's not my number. And you have a gold ounce, but you're trying to make transactions to sell to acquire $40,000 worth of goods. Well, you just got 10,000 in gold that you liquidated that you don't get back in the gold price. You'll get back in a digital currency. Sure, you'll be made whole, but it's, again, not the actual form of money. So, at 50,000, a 10th ounce gold eagle is going to be $5 grand. right? So I'm a big believer in the fractional stuff because I think you need to make small change. You got to hit the number on the mark. So some of the fractional products that I recommend, the fractional gold and silver eagles, or silver eagles and fractional gold eagles, fractional 1 ounce rounds, gram, they're becoming a little bit harder to get. There's a little bit of delays. Some of my gram products that I recommend to my clients, I haven't been able to find them. I didn't check today because I was a little busy with other stuff, but I will here soon. And I'm going to, be surprised if I can fill an order. So we're starting to see shortages on some stuff, and going forward, I don't see that slowing down a little bit. Now, once we get to 4,000, it's probably going to bring out more sellers, but then again, you're going to have even more volatility. And let's keep in mind that these pullbacks, they're fast and quick. Like the one we saw today coming, in the open out of the Asian market, it was pretty steep, but look at the market now, boom, right back up. It would not surprise me with this volatility, and I'm not putting a price tag on it, but to see gold back at 2450 by Wednesday is really not out of the question. I mean, I've been saying it for a long time, not so crazy now, right?
Yeah, well, like I said earlier, now $100 move is, doesn't face the old time gold bugs. We're like, hey, we saw this last week. And Mark, one last thing is on what you
Sure.
mentioned there about the fractional gold and silver. And I was gonna say, even aside for like, if you set aside the politics, then what would really be ideal? Where and been thinking about this recently, where if you had something that was backed, certainly gold works as a backing, and then some sort of debit card where if you want to spend, I guess it's hard to find something to spend like $1.79 on at today's pricing, but whatever that amount is, that still, if you have used this electronic equipment we have with something that's backed. Although my one caveat to that is that probably you could do so much good to general productivity just by having stable currency that even if you factor in the political class and however much they want to grift off the top, makes you wonder how much bigger the whole pie would be. And I'm not saying that's what we will see happen, but at least, it seems like a good starting point. But Mark, if people have questions, certainly about the digital currencies, which I know a lot of the people who listen to the show often do, or anything else gold and silver related, can you just let folks know what's the best way to get in touch with you?
Yeah, the best way to get in touch with me, there's a link at the bottom of the comment section of the video, and that goes directly to my assistants and the people I work with. So there's the website, First National Bullion, and there's a link that will specifically take you to a landing page where you can give me your name, your phone number, your email.
Well, Mark, we'll see how much longer it is till we have $200 days up and down in gold, and
Oh, I'm looking forward to it.
did have a $2 day in silver a little not too long ago, and perhaps we'll see silver start to catch up soon. But anyway, I appreciate you checking in. Good to see you as always, and
Good to see you too,
everyone
buddy.
at home, thank you for watching. And we will see you again tomorrow.